Yo, what's up? Welcome back to my channel, Coach T's Hard Knock School of Business, where business knowledge meets street knowledge. You already know what to do. Like this video, subscribe to this channel. That's right now, like this video, subscribe to this channel, because it's going to be a video that you're going to make a reference to. It's going to be the channel that you don't want to miss any new updates on. So right now, like this video and subscribe to this channel. For the past couple of weeks, we've been talking about business entities. We talked about the sole proprietorship. We talked about the business partnership. We talked about the corporation. And we understand that there's some advantages, some tax advantages and some legal advantages of having all three. There's some tax advantages and legal advantages of either being a sole proprietorship or a partnership or a corporation. But here's the thing. So I told you before in the past video, I said, look, there is an entity out there to where you can combine the legal protections and the corporate protections and still get some of the same benefits of being either a sole proprietorship or a partnership. And that particular type of business entity is limited liability. I just said something right there. That type of entity is limited liability. Now, if you can just reflect back on the sole proprietorship and the tax benefits of a sole proprietorship and comparing that to a corporation, with the tax advantages of a sole proprietorship is that you're not double taxed. The taxes or the income or the money that you make or the revenues you make is actually rolled back through your income taxes. It's rolled back through your personal income taxes. So you're not getting a business tax and you're not getting a personal tax at the same time. You're only getting taxed one time on your money. Then with the partnership, same concept. You're only getting taxed one time on your money. Okay? Whatever revenue you and your partners make on in the business, it's only getting taxed one time. It's not getting taxed on the business and then it's getting taxed on the person. Okay? But with a corporation, if your business was set up as a corporation, you're getting taxed as a corporation, and then the money that you pay yourself, you're getting taxed on that as well. So it's double taxation. Remember, that was double taxation. Now the difference in on the legal side was, if you were driving a company vehicle and you had your business set up as a sole proprietorship, you hit someone, they're coming after you, they're suing you. Partnership, same situation. You or your partner or any of your employees in the company have an accident driving a company car, they're coming after you. They're going to sue you personally. Okay? They're going to sue you personally. And they can probably sue you and your business. As a matter of fact, they can sue the business and sue you. They can come after the deep pockets, okay, wherever the deep pockets may be, whether it's your pockets or the company's pockets. You can't run and you can't hide. Okay? Now, from the corporation standpoint, legally, from the legal standpoint of a corporation, if you're driving a company car, they can't come after you if you have an accident. They're coming after the business, because the corporation is protected by what we call the corporate veil. Okay, the corporation is protected by what we call the corporate veil. So there's a big old umbrella that protects the corporation. Now, I told you that there was an entity out there that can get the legal benefits of the corporate veil and the tax benefits of not being subject to double taxation. There really are two entities, but they represent pretty much the same thing. The limited liability company, if you can imagine a sole proprietorship, rather than having a sole proprietorship, you establish an entity as a limited liability company. And if you can imagine a partnership, rather than establishing, or you and your partners establishing the business entity as a partnership, you establish it as a limited liability partnership. So we're talking about a limited liability company and a limited liability partnership. Now, with the limited liability company or a limited liability partnership, one is an LLC, the limited liability company, and the other one is an LLP, the limited liability partnership. With the limited liability company or partnership, you're going to receive the same tax advantages as you would with the sole proprietorship or the partnership. You're not going to be double taxed. The revenues that are generated, they're gonna fall back down through and roll back through your personal income. So you're only getting taxed on it one time. Let's say this again. If if the company makes money, as a limited liability company, when the company makes money, the owner is only being taxed one time. They're not being taxed as a business. Whatever the income is that the owner takes out from the company, the owner is going to receive that as revenue or receive that as income, and that money is going to be taxed one time. Whenever the partnership makes money, that money is going to roll back through however the money is divvied up for each of the partners, and you're going to be taxed according to how much money you receive from the business. And it's going to be shown through or recorded through your personal income taxes. So the partnership is not going to be taxed on how much money the business makes and then how much money the partners make. It's only going to be reflected on how much money each partner brings in from their revenue. One partner may get 10%, one partner may get 90%. Of course, the one that gets the most return is going to have the most taxes, okay? But bottom line is, what we're trying to avoid is double taxation. Now, from the tax standpoint, you're not being double taxed. So you're getting the advantages of being a sole proprietorship or a partnership, but you're getting it with the same protections under the corporate veil as a corporation. Reason being, as an LLC, a limited liability company, or an LLP, a limited liability partnership, your business is protected as a corporation. So if you drive out there and you drive your car, you drive not your car, but you drive a company car, and you have an accident, or someone that works for the business that's driving the company car and they have an accident, when the person that is hit tries to sue, they're coming after the company. They don't have a right to come after you as an individual. They have to go after the company. So you're getting the same protections as a corporation legally, and you're getting the same tax benefits as a sole proprietorship or a partnership tax-wise. That's why many people set up businesses as LLCs or LLPs. I'll be honest, the limited liability company is my favorite type of business. I've set up all my businesses as LLCs, regardless of what type of business it was. My self-publishing company I set up as an LLC. My construction companies I set up as LLCs. My speaking business I set up as LLCs. I like to set my businesses up as LLCs, one, so that I can receive the tax benefits of the sole proprietorship, and I can receive the protection under the corporate veil of a corporation. You say, well, why would you need an LLC for a self-publishing business? In self-publishing, pretty much you have written records, books, right? Audio. And, people get mad about some of the things you say, or they may disagree with some of the things you may write. They may decide to sue you. So rather than just having my business set up as Terod Robertson or Coach T, I have it set up, under my business entity name, and my business entity being LLC. So if somebody does decide to sue me, and if they just happen to win, they'll sue and they'll win and they'll beat my business. And you can't come after my personal. You'd have to go after my business. Same thing in construction. You go out there, you build a building, you build a home, and something happens, or homeowner disagrees, or the owner of the property disagrees with some of the things you may have done, or whatever the case may have been. They can sue, but they would have to sue my business, that LLC, not necessarily definitely not my personal, which would be a sole proprietorship, because I wouldn't set up a business as a sole proprietorship. Now, with that said, I know that there may be questions, and that's why we've been having these videos for the past couple of weeks on business entities, sole proprietorships, and partnerships, and now we're on LLCs and LLPs. The reason why we're doing it, so you understand all the different advantages, not necessarily all, but you'll have the general advantages of using all three. So when you go talk to your attorney, you go talk to your CPA, and they say, hey, you need to make the decision on which one you want. These videos are going to help you understand, hey, look, this may be the best type of entity for me. I know in the past video, in the last video on corporation, I didn't give you where to go to get your corporation. I don't believe. But bottom line is the corporation, the corporate filings and the partnership filings, the LLC filings, all of those come through the Secretary of State of whatever state you're in. Now, I know in the partnership, I did tell you where to go to for your partnership agreement, but for the corporation, I didn't. So now I'm backtracking here, and I'm letting you know that for your corporate filings or your corporate applications, your corporation applications, or your LLC applications, or your LLP applications, you will get those applications from your Secretary of State. And in most cases, you can go to the website of the Secretary of State within your state, and you can download those applications. Now, the costs are going to vary depending on your state. I think on average an LLC or an LLP application is going to be about $200 to $225. It could go up to as much as $350. I have seen them applications for $350, but on average, I think I've seen it anywhere from $200 to $225. But it could go up to $300, $350. But what I'm going to tell you is it's worth it. The LLC, if you can qualify your business as an LLC or an LLP. Again, that's a limited liability company or a limited liability partnership, is worth it. Now, there's some extra things that you've got to add into there. Your articles of organization, or your articles in your corporate filings. They're called articles of incorporation. It's pretty much the bylaws of your business. In the LLC and in the LLP, it's going to be the articles of organization. The articles of organization, how you're organizing your business. What are the rules and the bylaws of your business? How can people get into your business? How can people get out of your business? As a business owner, you want to have an exit strategy. And what is the exit strategy? Exit strategy is, how am I going to close the business? And all the rules that you want to create for your business. You can make it as simple as possible initially, and then go back and change it, or go back and add to it in the future. But that's what you're going to need. The primary thing you're going to need is the name and address, the primary place of business. If you're a company, your name. If you're a partnership, all the partners that are involved, and then you're going to have the rules, the articles of organization. And again, initially you can make it very simple for your articles of organization. It could be one paragraph, and you can go back in the future. You can add back to your articles later on, so that as you grow your business, or as you have more time, you can increase what all the business entails, and everything it takes for you to get in and get out of the business, and who is involved and why. But that is pretty much it. When we talking about for me, for business entities, there's the sole proprietorship that we've talked about, the partnership, the corporation, the limited liability company, and the limited liability partnership. Outside of that, there are other types of business entities, but pretty much the rest of them are in some form or another going to be very similar to the LLC, the LLP, or the corporation. I mean, it's just going to be some varying degrees of terminology that will be used to describe what those partnerships or what those companies are. But for the most part, the sole proprietorship, the partnership, the corporation, the limited liability company, and the limited liability partnership are the 5 that most small businesses should be most concerned with. So if you have any other questions, or if you have any concerns, just hit me up. Leave me a comment below. Again, like this video, subscribe to this channel, and go out there to Amazon.com and check out my book, The Best Idea I Ever Had Right Now. I think if you're a small business owner, or you just intrigued by small business, or starting businesses, or have ideas, or you're just trying to figure out what other entrepreneurs think about and what they do and how they start those businesses, I'm telling you, you're going to be able to find all those answers in The Best Idea I Ever Had Right Now, authored by yours truly, myself. So again, like this video, subscribe to this channel. I look forward to seeing you again next Monday and Thursday.